everybody, this is Vasilis Girasis for ntmarkets.com. I'm glad to be back at the desk after a 2-week break and see some interesting developments. Obviously, markets worldwide have been touching on multi-year highs, and I suppose the question now, do we continue to hold, do we sell, or dare I even say buy at these levels? In terms of the local front, or the JSE or the South African market, we believe that there still are a couple of sectors that are showing good potential to go higher, that are looking quite strong, but we are a little bit hesitant on the retail counters still. They were smashed quite badly a few weeks back, and we still maintain that those counters are relatively expensive and will probably steer clear of those for the time being. We have picked up a couple of graphs this week that we think are looking quite interesting. I'll begin with Assore. This is a company that's heavily reliant on iron ore. As we can see on the graph here, it has actually rallied quite nicely. It has a very strong move to the upside. We don't really have a strategy on this one. We just feel that the iron ore price has rebounded from its lows. But we do, however, feel that it is overvalued. We're expecting a large supply to be hitting the market over the next couple of years, and this should put pressure on the price. So we feel that the iron ore price can come down, in which case a stock like Assore could come down quite heavily on the back of that. Another company that's also heavily affected by iron ore is Kumba Iron Ore, and obviously we feel that maybe steer clear of that one as well. Very cautious, very tight stop losses on companies like Assore and Kumba Iron Ore going forward. If one really needed to dabble in Assore, I would look for a pullback around about the 395, 390 level, and should it go higher and make new highs. This is a fairly illiquid stock, so we feel that it would make highs on very low volume, so you might get caught and then find that you can't actually get out on the other side. So we don't have a strategy on this one. We just feel that it is a little bit too high. Trade with caution and keep a lookout for the iron ore price. The next stock I'm going to look at is Exxaro. Now, do we like Exxaro? It's ironic actually that we've just given a doom and gloom report on the iron ore price, but then tip a stock like Exxaro, which is heavily reliant on iron ore. Exxaro does own quite a large chunk of the Sishen Iron Ore Company, and the Sishen Iron Ore Company is very profitable for Exxaro, but Exxaro also has a major interest in coal, and we believe that gold prices are going to rise in the coming years, so we feel that this share is a good buy going forward. Apart from its fundamental strength, we also like Exxaro technically. As we can see on the graph here, we feel that a break above 180 could bring up 185 quite quickly, and then we could see a run up to about 200 Rand or so. So our strategy on this one is to go long above a break of 180 Rand. Our stop loss 177 with a target price of 200 Rand going forward. The next stock is Anglo PLC. This one has been in the news quite a bit of late. There has been speculation that this could be a takeover target. It is looking cheap and offers quite a bit of upside, we feel. We had a recent rumor that Glencore Exxaro could buy and unbundle Anglo, Platinum and Lonmin, and they could either give or sell this or part of it to the SA government in order to try and get approval for the deal. It is an interesting thought. It does sound like an interesting deal, but we do, however, feel that it could be something out there for the time being. Watch the space, however. Also from a technical point of view, we like Anglo American. As we can see on the graph here, the 100-day moving average is about to cross the 200 to the upside, and we also note that it is making higher lows. So our strategy on Anglo American, we would look to go long at about 270 Rand a share. Our stop loss on this one about 264 with a target price of about 295. The last share we want to look at is Transhex. This one is more for the investors out there, not really a trader stock. We've liked this one because it offers good value. Transhex is a penny share, so this I suppose comes in with its own little caveat already, but we feel a stock like this, which has 3 Rand in cash, trading on a pretty low PE, I think of about 4.5. Its current earnings are about 74 cents, and its NAV is stated to be at about 4.66 Rand. So we think going forward this one is looking interesting. It is making higher lows, and it's making higher lows, and we just feel that this is a value trade. Again, I must say though, not for the traders. I'd say more for the medium to longer term investors. Good value companies will always come right eventually, and we'll see the benefit of that in the share price to come. They're also doing some kind of deal with De Beers, so keep an ear out for that one, and that should also be quite good for the company. So our strategy on Transhex is to go long at R3.20. Our stop loss on this trade is R2.95. We've got a target price of about R3.70. As we can see on the graph here, we've got that horizontal resistance at about R3.70. So we would probably take half the profits at about there, and leave the other half for the higher target price of about R4.50 and possibly even R5 a share. As an alternative strategy, one can wait for the stock to break through that R3.70 level, come back and retest it and buy it on the retest, and then likewise hold it for R4.50 or R5 a share. This is Vasilis Girasis for ntmarkets.com.